Wednesday, September 20th, market analysis, Stan Ehrlich. Good morning. Right in the middle of the trading day, 9:46 California time, we have a little bit of a rally. And at the moment, I want to stress it's not that much. Remember, I'm short-term bearish into October. And we're dealing with the progression of a head and shoulder top formation in the stock market indexes. I'll start out with the spider, as I usually do. And here is the end of the bear market of last year on October 13th, again, an October low. I'm expecting something not as dramatic, but similar in a smaller sense next month. So, middle of June, shoulder high, bearish engulfing ER sell signal in overbought conditions in a resistance area, perfect turning point we caught on July 27th. That's my bearish signal on the high day. A little later, we've got the rally high on September 1st, the last shoulder high, which by itself seems to have created a small 3-week head and shoulder pattern around that September 1st rally high, which was the shoulder of the bigger 3-month pattern. So we've got the same small pattern inside of a bigger one. So the small one we'll deal with first. It's only 3 weeks in size. Last Friday, Thursday, the rally high was not a new high. Turns out to be the possible last shoulder on a small 3-week bearish pattern. Next day, we broke out to the downside. Classic breakout situation, including a very small gap around 447-ish, which is so far a classic breakaway gap on a very small 3-week pattern. So 2 days ago, we popped up a little bit, nothing much. Yesterday's important because it did make new lows for a couple 3 weeks on the way down. And we did not get oversold. Remember, this is an awful small pattern, not particularly surprised. And now we have a little bit of a bounce. Today, it definitely feels like the market is waiting for something, and it could be a Fed announcement or some other information that's pre-planned point in time announcement. Anyway, we're up 1 point and a few ticks, and it's been back and forth most of the morning. We're a little higher than yesterday's high, but not the day before. And this does not appear to be particularly bullish or doing any damage to the bearish situation. We still have that gap to consider closing, and that's the breakaway gap. I don't think that's going to get closed, but if it does, it wouldn't violate any rules of the way the pattern's supposed to be acting. I can say, and I do expect, that new lows should be coming very soon, below yesterday's lows, before the end of the week, I hope, I expect. But there's that small possibility of a little bit more strength and then down. So I have no expectations that yesterday was an important bottom of any sort at this point. Let's go look at the DIA. If I can change the DIA, here we go. So bottom in last October, little double bottom, a head by itself on a bigger head and shoulder bottom. And now in the last 3 months, just like the spider, of course, and just like the Qs, etc., we have this middle of June shoulder high. We have sell signals developing during the topping out process. We have, oh, by the way, I should have mentioned the minimum downside objective on the spider is 407, 30 plus points lower. So the last shoulder high on the DIA was for the very small 3-week pattern last week. We broke out to the downside. Today, the DIA is one of the strongest of the indexes, currently up 2 points, but still below the neckline of the small pattern. I'll push off to the right a little bit. and not violating any rules, but it shouldn't get above the neckline and or close above it. That is not supposed to happen. Next move is to go sideways a little bit and or just down, down, down. Break out of the bigger major top formation, which has a minimum downside objective of approximately 324. What about Qs? Here we go. Middle of June, first shoulder high back here. We got the head of the formation. We got the last shoulder high, September 1st in every case. And now, yesterday, like the others, we saw lower lows for a significant amount of time. And today's rally is pretty feeble at the moment. We're actually down 4 ticks on the day. And since the breakout, which was last Friday, we haven't seen the Qs muster any significant strength at all. So the next move is continuing to move down and then break the neckline on the larger formation, which has a minimum downside objective of approximately 321. We're 370 almost at the moment. That's the Qs. And the futures contract for the E-mini, December futures contract, everything's the same, patterns the same, dates the same, prices are different. Minimum downside objective 4,115, and for the Russell, which is a little bit of a different story this morning. This is the only one that's breaking a little bit of a rule here. We have the June shoulder. We've got the top of the market in mid-late July. We've got the last shoulder September 1. All the same. But the neckline on this pattern was relatively flat, upward slanted slightly, and almost identical to the neckline on the 3-week small head and shoulder, which by itself was the last shoulder on the big one. Now, today we are trading above the neckline, which was broken on a closing basis yesterday. That should have been a downside breakout, and it should not have rallied up higher than the neckline. And today, 100% of the trading range so far is actually equal to or higher than the neckline. That's a no-no. So this throws a little bit of a monkey wrench in. Maybe the neckline should go across yesterday's low. We'll see what happens if it starts to slide and start to make new lows. That would change things very little. It would cause the downside objective to drop a little. At this particular time, it is very bearish, and it's looking like 165, let's call it. And that is going to be a test on the Russell 2000 of the major lows of last year. That's quite a bit of a break. It will end up sooner or later, I expect, causing a huge, big sideways multi-year trading range to break out of, hopefully bullishly. You have to understand that the rally high we had just July 31st, the high of the 3-month head and shoulder, was not even a new high for the whole year. It was last January that it was slightly higher than that. And then if you look back before the head and shoulder bottom finished, or the double bottom in this case, back in August of 22, you were also just a little higher again. There are 3 highs for the last year plus that are fairly close together and slightly lower each time, creating probably a nice bear trend line on a long-term basis. But that, my point is, next time we're up to around 200, it'll be a whopping long-term breakout. Okay, now, one last one, NASDAQ. We're looking at the NASDAQ futures contract, December futures. The head and shoulder top is still very much intact. And we're talking the 3-month pattern here. And the small 3-week is doing very well. And we have had a breakout last Friday, a little bit of a rally on Monday, and it started to sink yesterday, and today it's just nothing. Sideways, down a couple ticks at the moment. I need to see weakness. I need to see weakness real quick, and I don't want to see too much strength, although I can see it happening to a mild extent. Futures, futures, futures. The S&P 500 E-mini, of course, is a future as well as. So there's nothing really changing here. It's just a little bit different visual for you. And the NASDAQ doesn't even have the markings in for the formation to give you an idea what it looks like without bringing it to your attention. But the interest rate futures are rallying a little bit today in bonds. But the head and shoulder pattern I talked about a week or two ago is no more. It went sideways too much in the last couple of weeks and down, which it shouldn't have. It should have just started going up basically around September 11th, and it didn't. So we're looking at sinking market slowly. I'm expecting to see the lowest low challenged and broken slightly. I'm looking for longer term major bottom formations to be developing. I do not expect this to go down very sharply and very fast. 10-year notes are doing the same thing. Today was almost a new low for the move down, which it has been for the last several days. And there's no price range or activity here, except for being very, very close to oversold, that would have caused me to expect anything more than the rally, maybe up to the green resistance area again, which already happened and it didn't hold. And that would be 111-ish. So let's go to crude oil. Very, very strong rally, overbought for a couple, 3 weeks probably, and finally showing some sense of weakness. Not really. The fact is, it's back to higher on the day at the moment by a few ticks after having a little whiplash here. I think it's topping out, but I'm not seeing what I would like to see as far as the action is concerned. If we're going to have a downside correction, we're probably going to hold around 82, 83 and try to turn back up again. This has been a very significant longer-term bullish breakout. You realize these are new highs by a long shot since last November. Next chart. Same kind of thing happening in heating oil. Overbought, retracement, not quite as low as I would have liked. That would have been back to around 3.19. Didn't get there, and doing a lot of nothing today. Next chart. I'm bullish on heating oil, natural gas, except for a little more correction first. Sideways, big trading range, very ambiguous. Not to say, I'll wait. Gold. Aha. We have a bullish engulfing, but I think there's a little bug in my software that should not be green. We're way too high on the RSI. So I'm taking this as simply a bullish engulfing, but not an ER buy signal. Normally that's bullish anyway, but that's the kind of thing that I love and have pointed out likely to happen, then as it happens, and then after the fact, and so on. So yeah, August 21 was a great signal. This one, that should be white. Only thing is, it's getting a little close to overbought and a little bit close to some resistance. So I think it's about to peter out slightly, and we'll see what happens if it can touch 1,980-ish. And that's not too much higher. Next, this looks like a legitimate bullish engulfing ER buy signal in silver, period. We were oversold within the allotted look back days, and it was in a major support area at the same time as being oversold. So I expected it to rally out of it, which it has been. And now all of a sudden we've got an outside up day and an ER legitimate buy signal. We're going to go up to 25.30, I expect, at least 24.6 quickly. Next, platinum. A little bit lower on the day at the moment. We did get a buy signal near the bottom and one at the top and almost at the bottom just in the last 3 months. 2 months? Yep. So I'm looking for this gap to be closed. That means you're going to rally up to about 967-ish. And today is the doji inside trading range with a little bit lower current quotes, not meaning too much after all. After it bottomed out, taking about a week and a half to do it, you were up one big day, another up day yesterday. And so, a little bit of a dip, no big deal. Looking for more strength. Next, high-grade copper. I'm going to have to wait on some commentary on this for a little bit to see what's developing. Next, soybeans bouncing out of that historical support level I've been talking about for many months. We didn't get a bullish engulfing. We did get extremely close to oversold conditions. So oversold, not quite, but super close, in a support area is almost my best, one of my favorite combinations. So I'm not surprised it's rallying. And in fact, I wouldn't be surprised to see this come all the way back up to 1370-ish. Short-term friendly, because I think we're bouncing out of support. Next, bean oil, bad buy signal a few days ago, coming back down to support, getting close to oversold again. I think it's kind of likely to do exactly what it did a week ago, although there's a little bit more bearish tinge to this because the high of the rally, excuse me, with a bullish engulfing buy signal, which did not work, failed. So I'll have to watch closely here. I'm not saying buy it right now, but I do want to watch it super close if it starts to bounce out of the support. But I have trouble with this buy signal failing, and the rally was not very much. Excuse me. And you got that double top to work to deal with a ER sell signal on the second high. Next chart, soybean meal, major resistance, got overbought, poked its nose into the red zone here and back down again. So today is a pretty good rally, but we've had a pretty decent decline. I don't think it means very much. Still looking for a move down to 378 and very possibly down to 364 on meal. Next chart, corn. Yesterday made a new low again. We're bouncing slightly. I don't think it's going to go very far. Looking for another sell signal. I think we're going to see new lows again, and this time test the 455 level. Next, wheat's already done that kind of thing already. Tested support, bounced out of it, broke it, rallied up to it again, resistance, and now made a new low a few days ago and dribbling its way sideways to lower, I'm expecting. Next, cattle. Won't quit. A little bit of a stampede, every pun intended, and too overbought for me to like on the long side. Looking for sell signals. If we can get below yesterday's low today, we will have probably a bearish engulfing ER sell signal. I think today's high, which is 192.05, was above 192.00 by the minimum amount. So yes, if you can get below yesterday's low today, it'll turn red and we'll have an official sell signal, but that hasn't happened yet. Next chart. And I'm getting bearish in cattle. Hogs, resistance, testing it right now as we speak. I think it's about to turn back down. It gets a little tricky here. Don't rush it. Give it a little bit of downside movement before you get convinced, because that's not really giving away much more risk. And I think it's going to start to turn down. Next, OJ, I don't know. It's just incredible what this has done. It's still overbought. We're still likely to see a new high close for the whole trend, and the highest high was just yesterday. All I can say is watch out. This is a market that looks like it could collapse over a 2 or 3 or 4 day period, a huge amount. But it hasn't started yet. Next chart, cocoa, kind of did. Yeah. So 2 days ago on Monday, we broke down really badly out of a very overbought condition and wiped out several days of rally in one day. Now, yesterday, the day after that, it just popped up a little bit and didn't close very strong whatsoever. And then today we're making new lows again. So I'm looking for a move down to 3,310-ish. We'll get pretty darn close. Next, cocoa. Whoops, sorry. Coffee. Frequently they go together. Double bottom formation. We got the first low with an ER buy signal. It ended up double bottoming out. We've gotten overbought in the last couple of days, 3 days. So I'm not surprised it's dribbling back down somewhat. We're probably very close to turning up again. I think there's a very good chance we're going to get up to that 168 area at the top of this trading range. Next, sugar, the sweet. Looks like it's topping out. I really can't say very well. I don't have a good handle on this, I don't think. I'll wait another day, see what I can come up with, but I'm not, ruling out the big move down to 20 again. Wasn't that 20? Yeah, 20 something. Cotton. I think this is about to break down. I think it's about to start to make lower lows over the last few days, and then a couple, 3 weeks, and then see what we can do at 83.5, that support area. I think that's likely to probably hold it again. So it's developing into a yawn of a sideways trading range in cotton. Next, E-mini, that's it for today, ladies and gentlemen. Thank you very much. Have a great trading day.